The SNAP program has undergone modifications this year, affecting 42 million citizens participating in the program. SNAP benefit amounts vary based on people's household size, monthly income, and other expenses. The program sets restrictions on both net and gross monthly income broken down to household size. But the barrier to acquiring food aid in Michigan has been lowered. It is Governor Gwich'in Whitmer, signed a bipartisan bill removing the asset test as a requirement to receive SNAP benefits. And according to the Michigan Executive Office of the Governor, the move will offer greater financial security to those who need it the most and ease the burden of receiving aid. Michigan is now one of the 37 states with similar laws, and the governor says people who had more than $15,000 worth of assets, including vehicles and savings, were disqualified for food assistance. Officials say that 500,000 children in Michigan will benefit from the eliminated asset, and now in Maine, all recipients of the SNAP program will have their monthly benefits delivered to them by today. SNAP benefits are distributed to eligible residents from the 10th to the 14th of every month, with all beneficiaries scheduled to have their benefits by the month of July by Friday. Now, the next round of SNAP payments will also begin on August 10th. The state of Texas will complete issuing SNAP benefits worth up to $1,700 for a month of July this week. Texas has a long window for issuing payments, lasting through the first 10 days in a month. Even the amount received depends on one family size. A single household will receive $281, and an 8-member household will receive $1,700. But on a federal level, some House representatives want to expand the number of food stamp recipients subject to work requirements and time-limited food benefits by raising the age of people covered by the rules to 65. Members are writing the bill against the backdrop of extraordinary uncertainty in the economy and inflation, including the cost of food is so high that the Federal Reserve is willing to risk a recession to slow the prices down. Economic disruptions are caused by the crisis, and the robust labor market is expected to weaken in the months ahead. The past week, Democrats of the Department of Education announced that it will begin discharging student loan debts for borrowers who've been in repayment for 20 to 25 years under a one-time payment. Around 800,000 borrowers will benefit from this, and there will be $39 billion dropped. Joe Biden said the previous announcement is a one-time adjustment and will become an even more important lifeline for struggling borrowers than repayments start in September. The one-time payment adjustment the Education Department had counts certain months that were previously ineligible towards student loan forgiveness. But now, everybody, the Education Department announced a one-time payment adjustment for all direct loans and federally owned family education loans. Now, the adjustment to student loan accounts will go toward helping borrowers get closer to forgiveness under the income-driven plans. And after this adjustment, people should be getting stimulus payments because the one-time payment adjustment helps to reverse some of the damage caused by loan services that did not properly track deferments or steer borrowers to forbearance, instead of income-driven toward repayment payments, which would have continued toward years of payments. Some borrowers in the public service loan forgiveness program have already seen the payment adjustments in their accounts. So we know that
build back better, not just build back to where it was, but better, because the environment's changed an awful lot. I'm here to talk to you about what we're doing to bring manufacturing back to America, about our progress in building an economy from the middle out, and the bottom up, not the top down. Yesterday, we learned the economy grew faster than expected last quarter. And this morning, we saw data showing that last month, the annual rate of inflation continued to decline. So inflation is now at its lowest point in 2 years. And wages are up after being adjusted for inflation. When I came to office, I was determined to end the trickle-down economy. Excuse me, this little stand is out. Well, I'll make sure I don't trip over it. Maybe I stand on, make myself 3 inches taller. I came to office determined to move from a trickle-down economics that everyone from the Financial Times and the Wall Street Journal and it's called Biden
tax lawmakers and regulations in the country. A large number of states have announced they will be mailing and depositing relief checks for many residents. During the recently wrapped legislative sessions, the lawmakers agreed to send tax rebates to people in Minnesota, and now the rebates are $260 for individuals with AGIs very high, but $520 for couples who file jointly. People within those limits will get an additional $260 per dependent for up to 3 people they can claim. Rebates are expected to go out via direct deposit, and checks starting this fall too. It's important to note that the lawmakers and taxpayers who have to apply for these payments are going to get good money. Georgia has a very large budget surplus, and the latest report was more than $6 billion. As I was saying, to receive the funds, filers must have paid and filed tax for the past 2 years, and according to a spokesperson, Georgia's Department of Revenue has already processed over 1.1 million total refunds. It totals about $257 million. If you haven't received your money yet, don't even worry. The Department of Revenue said the funds will go out over the next 8 weeks for those who filed by April 18th. Those who filed after the tax deadline will, of course, wait a little bit longer, as refunds will not be issued until one's tax returns have been processed. A Wall Street Journal analysis of Federal Reserve data reveals a concerning financial situation for people ages 30 to 39. The demographic accumulated nearly $4 trillion in debt during the fourth quarter of 2022. It reflects a substantial $140 billion rise from preceding the quarter. Now, according to Yahoo News, the mounting debt is indicative of broader economic challenges faced by the generations. New York's Fed data reveals that millennials in their 30s are accumulating debt at a very high pace, which is starting to be alarming. New data have shown that 72% of U.S. millennials are actually in deep trouble, living paycheck to paycheck. More than 1/3 of Americans say there's still loans that prevent them from buying a home, because we all know that this is not the right thing to do. I also want to make another point on this important stimulus information, that a significant portion of the 22 to 37-year-olds surveyed revealed a concerning trend of retirement savings. According to the survey, a considerable number of respondents said that their monthly contributions to retirement savings were lower than the previous year.
Or debt on their credit cards, and there has been a huge jump in the number of people reporting they have signed up for SNAP food stamps or visited a food pantry in the past.
Folks, there's a ton of news about the fourth stimulus check, Social Security benefits, and SI and SSDI. So far, everybody, President Biden is saying that an urgent warning has been released to the federal government. The IRS has new information on how to receive stimulus. It may now affect your tax refund as well. Some of the low-income households will likely see their check amount decrease. The IRS has already released an urgent warning concerning how stimulus payments are impacting your tax refund amount for the year. This will matter when you file your taxes for the next year of 2023. The stimulus checks in 2021, alongside the expanded parent-child tax credits, enabled millions of Americans more cash back from the tax refunds. The taxpayers should know the refund amounts will not match the money they received before. If you also deducted charitable contributions without itemizing them on your taxes, you will likely see that the amount of money missing from your tax refund is big as well. It's because the IRS stopped a special crisis era this year, so you cannot break a tax break for donations to charities if you claim the standard deduction. In 2021, filers could claim up to $300 for cash donations or $600 if you're filing jointly. The tax break did not get extended in 2022, so there will be no financial benefit when it comes to your tax return. Ultimately, the IRS is giving you a smaller refund check. The IRS also warned that the timeline may be a little bit off in 2023 when it comes to refunds. According